Well, good morning, ladies and gentlemen. My name is Rob Milner, and I'm Chairman of Brickworks Limited. I would like to welcome all shareholders and visitors to the 84th Annual General Meeting, and I'm informed that we have some staff in Philadelphia in America who are the acquisition which we completed last Friday, and which Lindsay will give you a rundown on shortly. We have some staff listening in on the web, so welcome to you guys. If you have not been issued with a voting, non-voting or visitor's registration card, please see the representatives from Computershare at the registration desk just outside the function room. If anyone hasn't done that, please go out and do it. There's a few standing orders. Questions will only be recognised from shareholders and proxies or attorneys of shareholders, and only those who are registered with an electronic handheld device or those who hold an orange card are entitled to ask questions at today's meeting. Just a reminder, if everyone's got their phones on silent or turned off. Before we go any further, I'd just like to introduce to those seated on my right. First of all is Ms Susan Lepinos, our General Counsel and Company Secretary, our Managing Director Lindsay Partridge, Michael Milner, Robert Webster, Ms Deborah Page, Mr Brendan Crotty, Mr David Gillam, and right down there is Robert Bakewell, our Chief Financial Officer, and also we have Anthony Jones from EY, our auditor, present. After I've completed my overview, Lindsay will give the Managing Director's address, including a review of investments, property and building products. Following this, shareholders will have the opportunity to ask questions. Then we will move on to the formal part of the meeting. Brickworks has a diverse corporate structure that has provided stability of earnings and steady asset growth over a long period of time. There are three main parts of the Brickworks business model, with the company having significant assets in investments, property and building products. As a diversified business, we are less exposed to the market volatility and we are well placed to ride out the low points of the business cycles. We take a long-term view of our operations. Brickworks was formed way back in 1934 by a group of leading Sydney-based brick manufacturers and grown over time to become the largest and most successful brick maker in this country. And as I mentioned, we've just diversified into America as well. Brickworks was listed on the ASX in 1962 and in 1969 made a significant investment in WHS Soul Pattinson that remains in place today. We make investment decisions not for the short term but across cycles, ensuring that we are in the strongest possible position to continue to grow and succeed in the future. The company is stable and conservative with a low gearing level, a prudent approach to capital management and a very stable board and very good management team. Financial year 2008 was an extremely successful one for Brickworks. Increased underlying earnings within the building products, property and investments resulted in total EBITDA of $309 million for the year. A record underlying profit of $224 million was achieved, up some 14% on the prior year. This translates to underlying earnings per share of 150 cents. After including the impact of significant items, statutory net profit after tax for the period was $175 million, down 6%. Total shareholders' wealth grew by $433 million due to an increase in our share price and our dividend payments. A fully franked dividend of 36 cents per share is payable to you tomorrow. This takes the full year dividend to 54 cents per share, which is up 6%. Based on our current share price, this represents a grossed up dividend yield of around 5.1%, including the benefit of franking credits. The chart on the screen shows our dividend history going back 20 years. We recognise the importance of dividends to our shareholders, and we are proud of our strong and stable dividend history. Brickworks is one of only 9 companies on the Australian Stock Exchange All Ordinaries Index that have at least maintained the normal dividend every year since the turn of the century. In fact, since listing in 1962, we've only reduced dividends once, and that was in 1975. Over the past 50 years, Brickworks has delivered an average shareholder returns of over 12% per annum. This means that $1,000 invested in Brickworks 50 years ago, in 1968, would be now worth $390,000 as at the 21st of November. During financial year 2018, the share price increased by 22.3% to the All Ordinaries Accumulation Index return of some 14.9%. Having said that, the market continually values Brickworks based on our building products outlook and not on our investments in property that contribute to earnings and asset growth well above building products. Following repeated warnings from industry for many years and a lack of meaningful response from government, the Australian East Coast energy supply crunch has now arrived on our doorstep. Within Austral Bricks, energy represents almost 20% of total manufacturing costs, and therefore any increase in energy prices has a significant impact on our margins. The chart on the screen shows a dramatic increase in our contracted wellhead gas prices across major East Coast states, and they are dramatic, up to 34, 45 and 29%. In January this year, gas prices across the East Coast increased by 21 and 66%, depending on what state you're in. At the same time, electricity prices increased by between 14 and 160%. An additional gas pricing increase of between 29 and 45% has been contracted and will take effect from January next year. Once all these price increases take effect, the total annual cost impact is almost $24 million, assuming constant energy consumption at 2018 levels. Putting this another way, this is 1/3 of last year's building products earnings. Due to the timing of the price increases, this impact is being progressively felt over financial years 18, 19 and 2020. As shown, the increase in the current financial year compared to last year is $11.7 million. Our experience is being shared by businesses and households all across Australia, and it is no surprise that increasing energy costs are driving business investment and employment offshore. Surely someone will wake up. There's talk that if we get a really hot summer, Sydney could be without power for 2 weeks. So I suggest some of you get generators and make provisions, because don't laugh, this is serious. This is going to impact all of us very, very quickly and very shortly. Brickworks continues to implement initiatives to make savings elsewhere within the business to offset the impact of higher energy prices. The continued strong performance of the company is a credit to our staff. On behalf of the board, I would like to thank them all and our executive management team for their ongoing efforts and their commitment. And we have a lot of them here on our right. Lindsay will introduce you to them later. I would also like to thank my fellow directors and our shareholders for your continued support. As previously advised to shareholders, Mr David Gillam is not seeking re-election at this annual general meeting and therefore retiring from the board today. On behalf of the board, I would like to thank David for his 15 years of service as a director. David was appointed a director in 2003 following the acquisition of Bristol Limited, where he served as the managing director. So thank you, David, for what you've done. As part of our succession plan, the company has engaged external consultants to assist with the appointment of an additional independent non-executive director, preferably with international experience. I'll now hand you over to our Managing Director for his report.
Thank you, Chairman, and good afternoon, ladies and gentlemen. It gives me great pleasure to report that Brickworks has delivered another strong financial result in 2018. We've also made significant progress in the implementation of a range of strategies that will position the company for future growth. The health and safety of our people is our number one priority. and the company has made steady progress in reducing the number of workplace injuries over many years. However, there were 5 lost time injuries during 2018 financial year, up on 1 on the prior year. This translates into an increase of lost time injury frequency rate of 1.7 compared to 1.3 in the 2017 financial year. And the total reportable injury frequency rate increased to 20.4 from 17.1 in the prior year. Whilst disappointing, the increase in workplace injuries in 2018 follows 4 straight years of decreasing injury rates, but it has also reinforced the company's commitment to rolling out best practice safety standards across all our operations and seeking new ways of improving safety. As the Chairman mentioned, Brickworks has a diversified portfolio of businesses. Investments consist primarily of a 42.7% interest in Washington H. Soul Pattinson, an ASX 200 company with a current market capitalisation of 6.8 billion Australian dollars. Building products consists of leading brands such as Austral Bricks, Bristol Roofing, Austral Masonry, Austral Precast and Auswest Timbers. As we announced on Friday, and I'll discuss a little bit later, we can now also add Glengarry, a newly acquired US brick business, to that list. The property business exists to maximise the value of land that is surplus to the building products business and includes a 50% share in an industrial property trust with the Goodman Group. Our strong financial performance during the year again reinforced the benefit of our diversified strategy, which has consistently grown net asset value over the long term and helped to deliver solid returns and stability to our shareholders. Looking now at investments, the largest part of the group by asset value. Investment consists primarily of the 42.7% stake in WHSP, a core asset of Brickworks that has brought diversity and reliable earnings to the company for almost 50 years. WHSP is a diversified investment house with interests in a wide range of companies including TPG Telecom and New Hope Corporation. As mentioned a moment ago, it has a current market capitalisation of $6.8 billion. The underlying earnings before interest and tax from the investments was $123 million for 2018, up 20%. In addition, $56 million in fully franked dividends were received from WHSP. As shown on the chart, our investment in WHSP has provided a steadily increasing cash flow stream via dividends. And this is of critical strategic importance, allowing the company to make long-term investment decisions in spite of cyclical downturns, and also underpinning Brickworks' own dividend to our shareholders. Brickworks' share of WHSP currently has a market value of around $2.8 billion. This is up by almost $600 million since the 31st of July this year, following recent strong share price growth. WHSP has a proven investment approach that has delivered strong shareholder returns over the long term. The company has a track record of disciplined but opportunistic investments and capital allocation. Significant value has been added through active M&A across WHSP and group companies. Recent examples include the TPG merger of equals with Vodafone, that's still subject to regulatory approval, New Hope Corporation's acquisition of the Bengala, and the sale of the Pitt Street head office building. WHSP is a stable and trusted business partner to Brickworks, and we are confident that WHSP will continue to add value and deliver a growing stream of earnings and dividends over the long term. Turning now to property. 2018 was another incredibly pleasing year, with property delivering an EBIT of 94 million, up 4% on the prior year. This represents the 6th consecutive year of earnings growth. The improved result was due to significantly higher earnings from the property trust following the development of assets at Oakdale Central and Oakdale South in New South Wales and Rochedale in Queensland. In May, we announced the sale of our Punchbowl site, and this sale was completed in October with a sale price of $41 million and total costs of approximately $8 million. This translates into a profit of around $33 million to Brickworks, and that will be recorded this financial year in the first half. We are focused on continuing to build asset value in the property trust and have reinvested cash proceeds received from land sales in recent years to support development activity and reducing debt. This has seen total assets within the trust increase to over $1.5 billion at the end of July. This is a significant achievement considering the trust's inception was just 10 years ago. After taking into account debt, Brickworks' share of net assets value was $538 million at the end of the financial year. Looking ahead, the JV Trust has a strong pipeline of land which will be developed over the coming years. With Oakdale Central now complete, the main focus of the development is currently Oakdale South. The sale of Oakdale West into the JV Trust in 2016 has secured development for over 10 years, pending the development approvals. And I'd just like to mention there was a fact that I found out yesterday, that the infrastructure development of Oakdale West will be the second largest project in Western Sydney besides the new airport, so to give you some idea of the scale of that. In addition, plans are now in place for the development of 10 hectares of surplus land at the 88-hectare Plant 3 site known as Oakdale East. This site has been identified for development of a mixed-use industrial site, and it will include a new masonry plant, which will replace our existing masonry plant at Prospect. Longer term, further surplus land at this site may become available for development. Surplus land will be sold into the trust to facilitate development activity at this site. The largest site held for development by Brickworks is at Craigieburn in Victoria. This is a 330-hectare site that has the potential for rezoning into residential, followed by development in the future years. Now looking at building products. Building products is a strong national business with manufacturing plants and display centres located in all states. In total, building products in Australia comprises 33 manufacturing plants and more than 27 display centres and design studios across the country. This is complemented by an extensive reseller network that includes over 100 additional displays. Geographically, our sales revenue is spread approximately in proportion with building activity in those states. Our broad portfolio of products also provides diversification across market segments, including detached houses, multi-residential developments, non-residential building, and infrastructure projects. In 2018, building products revenue increased 7% to a record $820 million. EBIT was $76 million, up 17% on the prior year, and EBITDA was $105 million. Unit margins and return on assets also increased on the prior year. The result was characterised by another strong performance from the East Coast divisions, buoyed by continued robust demand in New South Wales and Victoria. In addition, performance in Western Australia improved despite the further deterioration in the market activity due to a range of restructuring activities undertaken in the prior year. Looking now at our building products divisions, the largest of which is Austral Bricks. Austral Bricks commenced operation in 1908 and is Australia's largest clay brick manufacturer, with significant market position in every state. Austral Bricks has 10 plants currently in operation with a combined productive capacity over 700 million bricks per annum. That is enough for around 70,000 homes. In 2018, Austral Bricks delivered a 13% increase in earnings, with sales revenue up 8% to $447 million. That was on the back of strong performance from the major East Coast states. Austral Bricks continues to benefit from a range of initiatives to increase the sales of premium, higher margin products. During the year, upgrade works were completed at the Rochedale plant in Queensland and the Cardup plant in Western Australia. The focus for future capital investments has now turned to New South Wales, where there's been limited capital expenditure for over 20 years. Projects under consideration include the complete refit of Plant 2 at Horsley Park and a completely new facility at our new Berrima Industrial Estate to replace the ageing and energy-intensive Bowral plant. Over the past 15 years, Brickworks has diversified its portfolio by establishing leading positions in a range of other building products, including Austral Masonry, Bristile Roofing, Austral Precast, and Auswest Timbers. Our products are all proven, trusted, and well established in the market and provide important diversification to Brickworks. Combined, these businesses generated revenue of $364 million in financial year 2018. Earnings in Bristile Roofing, Austral Precast, and Auswest Timbers were all higher in financial year 2018, whilst earnings in Austral Masonry were relatively steady. As I mentioned a moment ago, plans have been developed and approvals are being sought for the construction of a new 200,000 plus tonnes per annum masonry plant to replace the existing site at Prospect, which needs to be vacated by the end of 2020. We have delivered a number of exciting projects and launched a range of new products during the year. A few examples of these are on the screen. On the left is the Darling Square project in Sydney. Construction of this mixed-use high-rise development in 2018 was a culmination of over 2 years' design and product development collaboration with Austral Bricks, Sains Architect, and the builder was Lend-Lease. Ultimately, the project involved the supply of almost 600,000 ultra-premium bricks with various shapes, sizes and surface finishes. Bristile Solar was launched during the first half of 2018, and our integrated solar tile is shown on the bottom right of the screen. The Bristile Solar package is offered in conjunction with Bristile tiles and Sonnen batteries and is expected to attract new customers and support increased roof tile sales volume. We also launched the ultra-premium range of Poesia glass bricks during the year. Demand for this product is very strong, with a number of projects planned for the current financial year. As I previously mentioned, on Friday we completed the acquisition of Glengarry for 151 million Australian dollars. And I'd like to take a moment to explain a bit more about the company and the strategic rationale. Like Austral Bricks, Glengarry is a company with a long and rich history in brickmaking dating back to 1890. Since that time, it has grown to become the fourth largest brick manufacturer in the US, selling around 230 million US bricks per annum and having a capacity in excess of 400 million bricks available. It is headquartered in Philadelphia and has a leading market position in the northeast region of the United States. Glengarry has 10 manufacturing plants. 9 of these are brick plants. The other is a manufactured stone plant. It has a total employees and staff of 655, and for the 12 months to August 18, generated $18 million in Australian dollars in EBITDA on 162 million Australian dollars of sales. Glengarry offers a full product range and has a diversified market exposure. It has a strong reputation for premium products, with around 65% of sales to the architectural segment, made up of non-residential, high-density residential and paving, and other projects, I've got to say, like schools and hospitals and baseball stadiums. A number of projects showing Glengarry's products in these market segments is shown on the screen. The top left photo is the Apple store in Brooklyn, New York. The next photo is the Madison Avenue Apartments, also in New York. The bottom is the Google corporate office in Ann Arbor, Michigan. And the photo on the right shows the Residence Inn located in Baltimore, Maryland. Some fabulous projects there. The acquisition is consistent with the building product strategy to deliver growth by investment in affiliated businesses. Specifically, the acquisition provides Brickworks with exposure to a large, attractive market with strong growth drivers. The US brick market is estimated at Australian $2.2 billion in sales revenue, approximately 3 times the size of the Australian market. It allows Brickworks to create value, leveraging operating expertise and sharing best practice across the US and Australia. It offers Brickworks a strategic platform to pursue long-term growth. The US brick industry is highly fragmented, consisting of around 37 separate manufacturers. This compares with only 5 in Australia, and I've got to say, and only 2 on the East Coast, where the ability for further market rationalisation is limited. It brings geographic diversity to building products with exposure to the US and Australian construction cycles. As shown on the screen, building products pro forma revenue, including Glengarry, is almost 1 billion Australian dollars. Brickworks expects to deliver low single-digit normalised EPS accretion in the first full year of operation, not including any cost or operational synergies. The acquisition of Glengarry represents a significant milestone in the history of Brickworks as our first major investment into an overseas market. We believe the US is an attractive place to invest and grow our business. In fact, the contrast with Australia could not be more stark. The US has tax policies that are supportive of business, proactive energy policy that is placing downward pressure on oil prices, on gas prices, efficient transport infrastructure enabling low-cost transfer of goods, and a relatively simple approval process for business investment. In Australia, on the other hand, we are faced with high taxes and wages, including taxes on wages, a shortage of energy for domestic use, resulting in exorbitant prices, excessive union influence that increases the cost of doing business, excessive red tape, and lengthy and costly approval processes for business investment. We are confident the future is bright for Glengarry. We are looking forward to working with the existing team to build on the strong foundations already in place and further enhance business performance. Turning now to the outlook. As I mentioned earlier, investment earnings and asset value are expected to continue to grow over the longer term. The property division has had a great start to the financial year, with the first half earnings expected to be similar to that of the full year 2018. This has been driven by continued capitalisation rate compression, the completion of the new developments at Oakdale South, and the settlement of the previously announced Punchbowl site. Following the strong start to the year, property is well placed to deliver record earnings for the full year. Meanwhile, building products earnings were materially lower in the first quarter compared to the previous corresponding period. Sales volume was marginally down, impacted by wet weather in October, particularly in New South Wales, and tightening credit availability resulted in project delays. In addition, manufacturing costs have been hit by the higher energy prices and a series of one-off production issues that have now been resolved. Despite the difficult first quarter, market fundamentals remain supportive for new housing construction, with employment levels healthy, low interest rates and high immigration levels. Demand in Victoria is at unprecedented levels, and with the improved weather in New South Wales, overall brick sales across the country in November are tracking above the prior year. Overall, the increased earnings from property and the combination and the contribution from Glengarry are expected to be more than offset the decline in the building products earnings in 2019. I would also love to take this opportunity, and I know there's about a dozen of our new American employees watching, so I'd like to take the opportunity to formally welcome them here today, and we look forward to working with you all. Brickworks now has in excess of 2,000 employees. Our people are the key to our success. I'm very proud that at Brickworks we've been able to maintain a stable and highly experienced workforce, and I believe this gives us a competitive edge. I'd like to introduce a number of our executive staff who are here today. Ms. Megan Cublins, Executive General Manager, Land and Development. Mr. David Fitzharris, Group General Manager, Sales and Export. Mr. Andrew Neros, Group General Manager, Concrete Products. Mr. Ross Baxter, General Manager, Bristol Roofing. Mr. Daniel Blazer, General Manager, Austral Masonry. Mr. Daniel Coots, General Manager, Austral Precast. Mr. Mark Callagher, General Manager, Corporate Development. Ms. Catherine B, Group People and Performance Manager. Mr. Wally Klukovic, Group Corporate Affairs and IR Manager. Ms. Melissa Perot, General Manager, Energy. Mr. Mikhail Korpel, Group Finance Manager. In addition, we have several other staff members, both here today and away, who have made an outstanding contribution to Brickworks over the year. I'd also like to take this opportunity to thank the Board of Directors for their guidance and support during the year. As the Chairman mentioned earlier, Mr. David Gillam is retiring from the Board today, So I'd like to especially thank David for his many years of service and his significant contribution to the company, and also personally for the guidance he has offered me over the last 15 years. Thank you, David. Finally, I'd like to thank all our shareholders, including those in attendance today, for your continued support of Brickworks Limited, and I now hand back to the Chairman for any questions.
As usual, Lindsay, an excellent presentation, thank you. Now, before we open the floor up to questions, I have a couple of questions that have been sent in. So the first one is from a shareholder, Barry O'Neill. The question: we are concerned with the increase in head office expenses, up 53% or 1.3% of revenue to 1.66 now. What is causing this, and please advise the steps to be taken to reduce this in the future? The answer: the increase was driven by a number of factors, including an increase in salaries reflecting additional resources in corporate governance capabilities such as legal, tax and risk, an increase in the short-term and long-term incentive bonuses due to the 95% increase in underlying group EBIT over this period, an increase in the D&O insurance premiums over the period, and also an increase in compliance costs. I can assure you the company remains focused on reducing costs across all areas of the business. However, moving into the ASX 200 brings in additional levels of regulatory scrutiny and compliance costs, and the company has moved to ensure we have the requisite skills to meet these requirements. Our remuneration schemes are market competitive as our D&O insurance premiums. A second question from a shareholder, Colin Dennett. Question: the widening price differential compared to historical averages between SOL and BKW is very curious. It tends to indicate that SOL is overvalued or BKR is undervalued. Would the Chairman please give us his view on this unusual situation? The answer: WHSP Group have made a number of significant transactions over the previous 24 months that have materially changed their outlook, and this has generated significant value for shareholders of those companies and for WHSP. For example, TPG's merger of equals with Vodafone, depending on ACCC approval, and New Hope's Corporation acquisition, and more recently the increased acquisition of Bengal, or a coal mine in the Hunter Valley. In addition, Perpetual have sold down all shares in SOL, increasing turnover and liquidity. Their sell down in Sols was earlier than it was done in Brickworks. Brickworks tends to be valued on a building products outlook, despite the fact that property investments are larger contributors to earnings and asset growth. Sentiment within the building products has been poor for the last 12 months, and this has been reflected in the share price performance of companies such as CSR and Fletcher Building. BKW is trading at a large discount to NAV. BKW is largely considered to be an operating company with an ongoing focus on Australian building and construction cycles. Investors tend to focus on the impact of the building cycle it has on our business. BKW trades at close to average of building products companies. Management continues to work hard to explain to the market the long-term value derived from the WHSP shareholding and the value created by our property division. Brickworks has recognised the need to increase our focus on investments and property in our investor communications. Now, do we have any questions? As I said, we're only taking questions from shareholders or proxy holders. So if you do, could you please raise your hand and we'll bring a microphone to you. I'd like you to state your name and whether you're a shareholder or a proxy holder.
Andrew McLean Cross, shareholder. I've got two questions. One is regard to our investments.
Can you ask one at a time, please?
Yes. One is relation to our investments. New Hope Coal, on what stands in the way of approval, because I understand that we won the court case recently, but it's under appeal. And what's our contingency plan if we lose on appeal and we can't go ahead with our development? And the other one is another one of our investments in which our
Can I just answer the New Hope one first?
Yes, yep.
Obviously, we're in a very delicate situation there at the moment As you mentioned, we've just had a tick from the Land Court, and now we need to keep tracking along the various hurdles that we need to pass before we're given a tick or a refusal for that operation. So, and under the circumstances, it's very difficult for me to answer those questions, because I hate to say something that would go back to the various authorities and put a black mark on New Hope's ticket.
Understood. The other one is regard to Tasmanian Poppy Enterprises, on which the managing director, Mr. Barlow, sits and it's had an abysmal share price. It's one of our investments, indirectly through Washington Soul Patterson, of which so I just wondered about that. The other
which
part
one was that again?
Tasmanian Poppy Enterprises, TPE.
Oh, TPI.
Yes,
Yeah,
TPI. It's languishing at a very low share price, and it is one of our investments. And I wonder if you're in a position to comment on that.
It's one of Soul Pattinson's investments.
Yes.
TPI, I don't know how many of you are aware, has one of the 8 licences in the world for patented drugs, Panadol, those types of things. Again, as Lindsay said, dealing in Australian bureaucracy and government is very tricky. That business originated in Tasmania. We weren't getting enough product through the factory, so we came to the mainland, Victoria, South Australia and now New South Wales, and signed some contracts with those various governments. And then the Tasmanian government told us that we weren't allowed to import product into Tasmania. That particular business employed 48 people. So we went back, and the Victorian government gave us $5 million to relocate that plant, and we're in the process of getting enough capacity through that plant. At the moment it's probably only running at about 40%, and the other advantage this company has is that it treats the product with water and not chemicals, so we have about a 30% cost advantage on our competitors. But until we get that factory up and running at full capacity, it will suffer. So we're looking to expand the products through that factory.
And the final question was with regard to export. I noticed on the slides here that we had a building in Hong Kong and a hospital in Papua New Guinea, and you introduced us to our export manager. Do we have any significant potential for exports, and how big a part of our organisation is that?
I'll ask Lindsay to answer that.
Exports account for about 5% of our sales, but you've got to look at that. It's more than what product we sell in South Australia, so it's reasonably large. The largest market, of course, is New Zealand. That's then dependent on the cycle in New Zealand. But we do export through product pavers right through Southeast Asia mainly. But the other business which exports a lot of product is the timber business. We export, believe it or not, sleepers back to the UK and timber for using in docks and things in the canals in Holland, and it's quite amazing where it all goes. And hardwood floors to the United States, so it goes all over the place. So, yeah.
Thank you, sir. Do we have any? Yes, could you just wait till we bring a microphone to you, sir?
Thank you. Peter Berger, shareholder. On the Glengarry acquisition, and by the way, overall, I think it's a good idea we're diversifying a bit. Was Glengarry, prior to our acquisition, a listed company?
Lindsay, would you like to answer that?
Glengarry was owned by Ibstock from the UK, so it was a subsidiary of Ibstock plc.
So that means we didn't have to buy shares in Glengarry and pay a takeover premium, etc.
Yeah, that's right. Yeah, but it was a negotiated price. Yes,
we
we paid a little bit over. We bought the business a little bit over 8 times EBIT multiple, so it was good pricing.
8 times
Yeah.
per annum EBIT.
Yeah.
My question then is, why were they selling?
Oh, okay. Well, Ibstock itself only existed for 3 years. It was spun out from I think Bain & Co. Owned it prior, and what they did, they were spun out together. They were spun out. They were born together, if you like, right? And but beyond that, you'd have to talk Dibstock why they want to sell. But they have invested in a number of new facilities in the UK, and I think they're basically looking to recover the cost of those facilities and take pressure off their balance sheet.
Understandable in the UK's current position. Oh, the other question is a little bit facetious. After your comments about all the difficulties with governments in Australia, will we, the shareholders, have to travel to Delaware to get to the next Brickworks meeting?
I don't think it's that big an investment. Thank you, sir. Oh, if there's no further questions, we'll move on to the formalities of the meeting. The notice of meeting. I propose that the notice of meeting mailed to all registered members on the 22nd of October be taken as read. Shareholders happy with that? Thank you. Now, we've all got a handset, so I'll just run you through the rules of this. If you are eligible to vote at this meeting, you'll have been provided with a handset and a smart card at the registration desk. If you believe you are eligible to vote but did not receive a device, could you please raise your hand and we'll get one of the guys from Computershare to come and... Right, so everyone's got the handsets, good. I will now go over the instructions on how to cast your votes. If at any times you have difficulty with your device or you're unclear of what to do, there are Computershare staff around the room. Can you guys just raise your hand so they know who they are? So we've got people that can help you out. Thank you. And they'll be able to assist you. If you are not already done so, please insert your card into the slot at the top of the handset with the barcode at the bottom and facing towards you. Can you just put mine in for me? I will open the poll. Your handset will activate. At this point, please press either 1 to vote for, or 2 to vote against, or 3 if you wish to abstain. And the numbers are up on the top left-hand corner there of that little gadget, so if we all do that. If you wish to change your vote, simply select a new option while the poll is open. Appointed proxies should vote in the same manner, pressing 1, 2 or 3. We'll cast any open votes that you have available. Voting instructions from the underlying holder will be cast automatically. At the close of the poll, votes from the handset will be added to the pre-meeting proxy votes and the result will be presented on the screen. How we going, is that right? Modern technology, I tell you. All right. In relation to any questions you may have... Oh, I've been there, done that. All right, item 1, the annual financial report. The Corporation Act requires the annual financial report, the director's report and the auditor's report to be considered at the annual general meeting. There's no vote on this shareholders on these reports. And again, as I mentioned before, we have Anthony Jones here from EY if anyone has any questions. Does anyone have any questions on the financial reports? All right, thank you. Right, item 2, the REM report. Item 2 of the business is consider the remuneration report for the company for the year. This report is contained on pages 69 to 81 of the 2018 Brickworks Limited annual report. In accordance with section 250R brackets 3 of the Corporations Act, the vote on this resolution is advisory only and does not bind directors of the company. So the resolution to adopt the remuneration report for the financial year ended 31st of July 2018. The complete 2018 report can be found in the annual report of the company forming part of the director's report. Are there any questions on the REM report? All right. Now, proxies. I refer to members to the screen for the proxy details received for this motion. The directors unanimously recommend that shareholders vote in favour of Resolution 2. As chairman of the meeting, I intend to vote all undirected proxies that I hold in favour of Resolution 2. A voting exclusion applies to this item of business as set out in the notice of meeting. I now open the poll on this item and put the resolution to the vote. You can see it's come up on mine, presume it's come up on the screen. So as I said before, if you press 1 to vote for, 2 against and 3 to abstain. So we all press now. Everybody, anyone need any assistance? So will it come up on the... You done it?
Yep.
Can you just come up here for a minute? So that'll come up on the screen, will it? Or? All right. If everybody's done, we'll close the poll. And we should see the proxies. All right. So the result shows that the resolution has received majority support, but less than the 75% majority, meaning that the company has received the first strike. We note the concerns of the shareholders and will engage with them further when we review our remuneration structures and disclosures to ensure your concerns are considered where appropriately addressed. We'll now move to the next item of business. As I'm up for re-election, I'll ask Mr. Rob Webster to come forward.
Item 3 is to elect Robert Milner as a director. The motion is that Mr R Milner, who retires as a director in accordance with section 6.3 of the company's constitution and being eligible for re-election, be reappointed as a director. The meeting now needs to consider director re-election in accordance with the ASX listing rules, the Corporations Act and the company's constitution. Resolution 3 is that Mr R Milner, who retires as a director in accordance with section 6.3 of the company's constitution and being eligible for re-election, be reappointed as a director. Details of Mr Milner's relevant skills and experience is contained in the explanatory statement to the notice of meeting. Mr R Milner is the non-executive chairman of the board. He first joined the board in 1997 and was appointed chairman in 1999. Mr Milner has extensive corporate and investment experience. He is a member of the Remuneration Committee and the Nominations Committee. Are there any questions? I refer members to the screen for proxy details received for this resolution. The directors, with Mr Milner abstaining, support the re-election and unanimously recommend that shareholders vote in favour of the resolution. As chairman of this part of the meeting, I intend to vote all undirected proxies that I hold in favour of resolution 3. I now open the poll on this item and put the resolution to the vote. Please enter your vote now. Those in favour of the resolution, please press 1 on the handset. Those against the resolution, please press 2 on the handset. And those who wish to abstain from voting, please press 3 on the handset. Everyone completed their voting? So we'll close the poll and the results should come up on the board. So I declare Robert Milner re-elected. Congratulations to him. And hand the microphone over to him.
Thanks, Rob. Well, ladies and gentlemen, that concludes the meeting today. So thank you very much for your support, and hopefully we continue the track record which we've had before you for the last period of time. So thank you.